and welcome to Alaska Commercial Real Estate Today. This is episode 2 of season 1, and thank you for joining me. I am your host, Phil Larson Sr. I am a senior partner at Rikrland Valuation Services in Alaska, and my co-host with me today is Alaskan Economist and commercial real estate appraiser, Lydia Larson, also senior partner at Rikrland Valuation Services. Welcome, Lydia.
Hello.
So, we should say this show is brought to you by Rikrland Media Productions. Thank you, Rikrland Media Productions, for providing the studio time and cameras. With that, we have some exciting national news this week, and we'll, of course, always bring Alaska news and round out the episode with a viewer question. I always think they're good ones because I pick them. But this one should be interesting. This is an interesting topic. So reading through, Lydia has a lot of notes on this. Should be interesting. So with all that said, welcome to the show. We'll get started with national news. Lydia, what's going on nationally?
Well, according to BizNow, many large lenders have stepped back from commercial real estate loans, and the local and community banks are stepping up.
Right.
That's noticeable in Alaska in the past few years, as Wells Fargo has made drastic cutbacks.
Significant cutbacks. Yeah. We definitely noticed it in commercial lending.
Yes.
The Wells Fargo commercial lending tended to start being a lot of troubled assets, stuff that they probably inherited through mergers. Would you say that that's been our experience? Was it a lot of new loans, or was it cleaning up old loans?
It's definitely been less new loans activity, and certainly a lot of troubled or, problem properties you would see come across our desks, at least. They're also, though, kind of curtailing their residential lending, according to the most recent news.
So that's the new news,
yes,
really?
Yeah. Essentially, last year, the larger banks were lending less in the commercial world. Yeah. And the local banks and community banks were stepping up, which we saw. We saw a lot of the local banks, especially with the additional funds that were available for small businesses. They typically were being funneled through community banks. So we saw a lot of that activity, but we're seeing probably the slowdown of that. The actual loan closings declined 4.7% year over year.
From last year,
from 21 to 22. So there has been a slowdown, and most likely, in most cases, we're considering that due to the Fed rate increases that happened through the year,
right?
Who will possibly continue into 2023.
Well, all of the market data that I have read and the stories about the Fed rate hikes, indicate that they have said that they're going to continue rate hikes through 2023. But those who are good at predicting what the Fed's going to do, because the Fed just kind of gives you an idea that we might do this and we're probably going to do that, but they don't say we're going to specifically do this and then we're specifically going to do that until they do it. They don't seem to give a lot of hints before they meet.
Yeah.
And then they do everything behind closed doors and we find out when they tell us. But smart people, as you mentioned, BizNow, I follow Green Street a lot. I know you follow Bradford, and what's the name of the other?
Marcus
and Millichap is one of your favorites. All good appraisers follow these national. You need to hear what other people are saying and make sure it jives with what you're hearing in your own market. And so we do that as well, of course. But what I've been hearing is that rate hikes are predicted to go through 2023, just at a significantly slower rate. The increases will be smaller. Is that what you've heard also? I mean, we work in the same office, but...
Sure. Yeah, I think that what we're expecting is less of an increase than we've seen in 2022. So the first one is scheduled for February, the first meeting. And so what they do from there, most are predicting a 0.5%.
Forbes is predicting 0.5%. Yeah. And Forbes is pretty good. They're one of those that are worth reading.
Right. So, yeah, I mean, it's something to keep an eye on. Commercial banks also, though, are been warned or about the tightening of the stress test requirements for the larger banks, the Wells Fargos and the Bank of America.
Stress test being and again, you can correct me when I get this wrong, but it has to, for the lay person like me, stress testing has to do with the percentage of how much of the bank held portfolio in loans can be in commercial real estate loans versus perhaps residential or other types of loans, right? And so the stress test thing kind of dictates percentages of the portfolio and what they're allowed to hold versus like money held in savings as well, correct?
Yes, exactly. And it's kind of a indicator of how well a bank will withstand a recession.
Right.
Based on the type of loans they currently hold. And they try to have an even balance or some kind of a mix of their portfolio.
Yeah.
And it's something that's come about, from previous financial.
What exactly? So that's one of the reasons why we pay attention to this, because it's an indicator of the direction that we see markets moving in. It's not a guaranteed predictor, but it is a sign of a changing market. And one of the things we see in changing markets is pivoting of real estate space, pivoting of businesses, right? One of the keys to long-term success in business is how well can you pivot what you do, where you do it, where your products are, who your customers are, what your market is, correct?
Yeah.
And can you withstand changes? So changes are happening, changes are coming.
Yes.
To commercial real estate markets, businesses, really globally. But what we care about is our national trends and how they affect Alaskan trends and how they affect Alaskans.
Right.
And what we're seeing is evidence of stagnation, certainly in the real estate markets. There's evidence of stagnation in the markets in Alaska. We've been seeing evidence in a lot of lower 48 markets of stagnation, which is properties not moving, right? So in a recession, we see right before the recession, we see stagnation. In the middle of a recession, as we're headed towards a depression, you see a lot of fire sailing, you see movement, you see foreclosures, you see people dumping properties, people picking up properties. There's a lot of change that happens, and that's a good time for appraisers, right?
Well, definitely. I mean,
it's difficult to appraise that market, but you have work in that market.
Yes.
And what we're in right now is the stagnation in a changing market.
Yes.
But stagnation does always seem to indicate the change in the market, either up or down. It happens before it falls or before it, zooms up and becomes hot. And what we're seeing right now is stagnation, but there's not a lot of indicators that we're headed into a hot market. I don't think there's a single indicator of that anywhere. Correct me if I'm wrong.
No, I mean, all indicators have been, a decrease in demand, longer marketing times for properties that are available, concessions or cash
are starting to happen.
Yes.
Talked about that last week, and concessions being a major indicator that we're starting to see movement. So when the concessions and lower prices actually happen to a point where the market is happy with the concessions or the price reductions, what we will see then is movement. And what we're not seeing yet is the movement. So me being who I am, and you're the appraiser, so I'll ask you, Are we looking at a reset in prices, or do prices just need to come down to see it? Because we're not seeing the movement, so clearly the prices have not been adjusted properly yet.
Well, yeah, seller expectations are is one of the key indicators. And so when you see properties that are listed and then subsequently sit on the market, in some instances, the sellers aren't willing to decrease their asking price, then they're willing to wait. So it depends in these cases of, what's the seller's motivation.
Yeah.
I think seller motivation may be changing.
Right.
And it certainly is something that does change as markets cycle, from a high to a low. So it's.
What no one knows yet is just how low and how motivated. So in the aircraft world, when we're doing aircraft, when we do aircraft valuations or other personal property that are perceived as being toys, and we're not talking about the business aircraft, we're talking about the Dr. Killers, VTEL Bonanzas and whatnot. When you see an aircraft like that go on the market and it's clearly priced way above market, we joke in the industry and say, well, his wife's making him sell it and he clearly doesn't want to sell it, right?
Yeah.
That would never happen to any of our assets. But is that what we're seeing yet? Are we still seeing pie in the sky? Because I know I saw a space as we were researching some of the market data and just looking through MLS data this week. There's some office space in Anchorage that has nearly 1,100 days on the market right now. And it actually didn't seem to me like it was stupidly overpriced. Like some of those have moved in the last year at that price per foot, range. And I didn't look into it. Maybe it was in the middle of Spinard and running down and had other, problems. But are you seeing a lot of stuff with a lot of days on market, like a ridiculous years, decades on market?
Well, you certainly see that in vacant land.
Yes. Remote, rural, large acreage. Yes. Pretty commonly we see been for sale for 10 years.
I sometimes see that with, there's a lot of property in Alaska that is hitting that 50-year age range right now. And we're starting to see a lot of those properties that are not been maintained, that are probably have some significant repairs needed, some other issues.
Improved properties that are 50 years old, not they've been on the market for 50 years.
So
now some of the DNR properties been on the market for 50 years because it was probably appraised by someone working at DNR that doesn't have a license to appraise real estate in Alaska. But those guys do whatever they want.
So it's the Alaska market is very stratified, and so there are wide gaps and ranges of days on market, but within
it's all over the place.
Anchorage has seen a lot of issues in this last few years, of how commercial properties have been affected by local regulations.
Local regulations is a really nice way to put it. And if you're smart economists nationally and investors, certainly appraisers in the certified general world of commercial appraising, MAI designated appraisers, will be watching these trends closely because all of these trends have little effects on markets, certainly on your exposure times.
Of course, yes.
So why don't you, Lydia, talk to us about the story of the week for Alaska? I see, let's see, cruises. So are the cruise ships coming back to Alaska? Talk about cruise ships.
Well, according to Cruise Lines International Association, the average capacity of the cruise lines in Alaska in 2022 was 74%.
74% of their capability.
Correct. So that would be approximately 25% less than full.
Right.
Which, if you think of 2019 as being the last year,
a good year
of 100% capacity.
Okay.
That's kind of the gauge there. Everyone's using 2019 as kind of the benchmark of when we've recovered.
Yeah. Well, our company was involved in some of the commercial real estate appraisal buzz around the deep water port in Sitka that was planned, right? And so they were going to expand to be able to get the mega cruise ships, similar in Ketchikan as well. And there was a whole lot of cruise ship port drama happening in there, and even some litigation that we ended up being involved in. So is our capacity more now, and that's why the percentage is less, or is this still just a holdover from China flu nightmare?
Really, the ability for Alaska to accept these mega ships has increased. So it is really the actual capacity of the ships. So it's what that indicator is 74% of the ship is full.
Yeah.
Meaning they're still sailing, but
I'm not sure if they're making money.
Right. They're sailing, but they're not at their top capacity of passengers. So it's kind of this
that
slow...
affects the Alaska tertiary cruise industry.
Exactly.
So if you're not familiar with that, what happens in Alaska is these major cruise ships, and we're not talking the little charters for 100 passengers. We're talking 5,000, or is it, what do you know, what's the mega ship now?
The mega ships are approximately 5,000.
5,000 people. So 5,000 people come, and these cruise ships, without naming names, we've got like two major names up here, right? They own the buses and cruise lines. They own the helicopters. They own the resorts. They own like all those little side trips that you're going to go to. But once they fill up with all the companies that they own, Alaskans get the overflow, and that's when the mom and pop gift shops and mom and pop helicopter cruises and all the various things that tourists like to do here, bear watching. That's when Alaskans get a piece of that pie. But if they're not full and overflowing, we really don't capture that money here.
Yeah, it's generally a mixture depending on the community of what cruise ship sponsored versus, independent operators. The further away you get from the cruise port, the more independent operators benefit. So you'll see communities, in Fairbanks and Talkeetna and certain areas where there are a lot of independent companies that cater to the cruise passengers. That certainly benefit from, people booking through the cruise line, but they are also an independent from the cruise ship. Yeah.
And while we have done some, through our office, we've done some leased land scenario-based boardwalk style seasonal businesses, and it's amazing what that real estate can be worth sitting on a boardwalk getting ready to fall into the ocean, without naming the one in Homer. What surprises me, though, is, or maybe it shouldn't be a surprise, is the concept of business. And when we help local business owners, or I help them with their business values, what they're encountering is there's this great idea of being on the cruise ship list and getting some of those passengers, but they don't guarantee any. And they push their own first, and they're operating businesses that they shutter every year, bring employees up, non-residents, to work Alaska, sometimes just in exchange for the experience. And they're able to operate so much more, I don't know if I would call it efficient, but it's certainly cost less efficiently than the local business who's here year round, has operating costs year round. And we do see locals shutter tourist type businesses as well, but it's still more expensive to operate if they're Alaskan owned all the time. And so that's a difficulty. So if the cruise ships are not all the way full, then we're just not seeing the same prosperity with the Alaskan owned companies. And they're certainly going to affect their ability to sell their business or business property if they can't be profitable there. And so that does trickle down, surely, to the value of the real estate then.
Yes. And we've seen a lot of vacancies in these communities where they did rely on the tourist market for the majority of their season. So it's it has affected real estate in a lot of areas.
A lot of work we've been getting out of Tok. Why don't you go ahead and speak to that? What's happening in Tok that we saw a major expansion of the largest company in Tok. They built a massive new building. They've been buying up some of the buildings around town and converting them to similar, sometimes different uses. But what's happening in Tok that all of this commercial activity is happening?
Well, the biggest news in the area is a new gold mine, which would be connected to the Fairbanks mine in processing, but would allow more, area to be just explored and developed right there in that community. So the need for workers is huge, and it's something that the Tok commercial market's trying to, and housing market is trying to accommodate. The availability of single-family homes is just not sufficient, so we're seeing a lot of the hotel operators, motel mom and pops looking to maybe secure contracts with this mining operation.
Now that's an interesting point, because I've seen it in the business valuation side. I know that you have performed at least 3 hospitality real estate appraisals in that area. I've yet to see, have you seen any of these contracts actually signed? They all say they have a promise of a contract signed by the mine, but none of them can produce this contract. Have you seen the contract?
Well, I think
the mine's happening.
Yeah, the mine is happening, and they are speaking with local operators. I think that the main goal is, though, to have mining property that would accommodate them that is owned.
And that we've seen acquisitions of and
Correct.
Construction
Yes.
for housing, man camp
Correct,
style
yes.
housing.
So there's been some acquisitions of existing properties that would possibly fulfill their need. They're playing it safe in a sense that they don't want to overextend themselves in obligations and then not use it. Because, contracts typically are signed in increments, 3 months or so, but especially if they were operating over wintertime, that plays into these operators and their expenses. So, rates will change. I think, though, as a community as a whole is preparing for a kind of a boom of development. And we are seeing a lot more activity of land purchase and single-family home purchase, construction, and in the area.
Yes, and our bank clients, I know I've spoken with a number of the, board members and vice presidents of these Alaskan banks, and they are investing heavily in the area. They are they're open for business as far as loans and commercial loans, which has been good for our company. But not only that, we've seen either plans or execution of expansions of their own bank branches themselves. And so when you see a bank willing to open a branch or expand its branch or hire, that's a good indicator that they are willing to put money where their forecast is that development is coming. And so some really smart Alaskans and some really smart businesses in Alaska are investing into the Tok area, and market participants should pay attention to that anymore. So great news for Tok. What else is happening? Do you have some market data for us around Alaska?
In the Anchorage retail for lease space, there's currently over 200,000 square feet available. Some of those being offered for more than over 1,000 days.
Right.
So a lot of this, to be fair, is to be built or new space. Some of it's proposed and not built.
Okay.
So a lot of it is market feelers, kind of gauging interest. That's what a lot of these listings are for, is trying to just gauge kind of the interest or the need of space. But the size of the space and the availability of space is significant.
So if you have a business model that would thrive well in an Anchorage environment, you should be able to negotiate good pricing.
Yeah, there's
vacant space available.
Certainly enough.
Should be a seller's or buyer's market when it comes to, or lessor's market, right? Is this for sale or for lease?
This is available for lease.
I see. Yeah,
retail space. Now, take with a grain of salt that sometimes these spaces miscategorized and maybe a mixed use kind of industrial or even office, but
I never take it for granted the fact that MLS data, when you go to confirm it, ends up, I hate to say 30%, but darn sure a quarter of the time the information in the listing is incorrect. In fact, just this last summer, I found a listing in Soldotna that was recorded for nearly 40% over what the lease documents actually said. And these data mining services like Zillow use active listing data and closed data by an algorithm to start giving their Zillow estimates, which, if you don't know, in Alaska are all over the place, very inaccurate. And even in lower 48, where they claim that they are accurate, really, they've just been debunked. Zillow's falling apart at the seams.
Yes, and to their credit, they do have a disclaimer, especially for Alaska, that their data is
done by a computer, not by a person. It's not an appraisal.
Less reliable. It's non-disclosure state, and obviously there's wide expanses of Alaska where there's very little data.
I just want to see Zillow estimates for all of Alaska be $10 because that's what all the sales closed at. So
right.
It makes sense to me that all property is worth $10.
Right. What they are good for is a data mining service. So it's kind of a shortcut, if you will, but it does not negate that you have to do your background discovery.
The due diligence to confirm the data, which is what we're talking about. When you go in and you do the appraisers or other market participants go to confirm the details whether it's an active listing or a closed listing or for whatever they're needing it for, what we're finding is that if you talk to the realtor who put it into MLS, you get one answer. And if you look at the actual sales documents or closing invoices or from the title company, or if the buyer or seller share their information with you, it's drastically different. And so I guess what I'm saying is, realtors, you can be better than that. Let's not screw all of Alaska by continuing to be dishonest. So that's the Alaska news, which actually segues quite well into the user question of the week. And so this week's question is, what is the difference between an appraisal and a comparative market analysis, also known as a CMA? First of all, I have a question for you. Is a CMA the exact same thing as a broker's price opinion or BPO? Is that, or is it different?
It can be, yes.
And why don't you explain? So answer the question. What's the difference?
Well, the main difference is that an appraisal is performed by a licensed, experienced, and educated appraiser.
Right. In Alaska, it's actually a Class B misdemeanor crime, which I have no idea if that's like a parking ticket or what. Our state doesn't enforce anything, so you may as well do it. There's plenty of appraisers out there that have never taken a single class and they're appraising real estate all day long in Alaska. The state does not care. If you call what you do an appraisal, and if you call yourself an appraiser, real estate appraiser, and you're not only are you lying and should you be slapped in the face, but you're committing a crime according to Alaskan statute. So no real estate broker can call what they do an appraisal, assuming they don't also have, a major conflict of interest and hold a real estate appraisal's license also.
So, and then a CMA, then it's basically anything performed by anyone that's not an appraiser.
So yeah, if you're not an appraiser and you do evaluation, it's a CMA. And if you're a licensed appraiser, then it's an appraisal.
Correct.
So that's the big difference.
Yes.
One is worth something inexpensive and the other's completely worthless.
Yeah, I mean,
or is it?
It's, I mean, a CMA for, maybe what you're gauging is just what are, similar properties selling for right now. And that's all you want is some kind of, wild guess. Then a CMA might be fine for what you're doing. Maybe you just really just want to, have kind of a range or a number. That's something that a real estate agent can do for you. And of course, though, the caveat there is that they're looking at it from the perspective of a potential customer as a seller that they're going to get you as a listing. So,
in many situations.
Yeah. So take it for what it is. Sure, if they are active in their market, and then they should have a kind of a range that they can throw against the wall for you.
There are good brokers in Alaska, a number of them. We work with the good ones, and many of them can't always explain why a property is worth what it is worth, but oftentimes their gut feeling or their hunch or the result of a basic CMA results in being really close to what you end up determining market value to be by actually performing all three of the approaches to value and doing the math and using confirmed sales. But what's that danger? We were just talking about the amount of realtors that either purposefully or what we all hope is true, accidentally put incorrect information into MLS that benefits them. What's that danger then in the CMA? Because what data is being used? Have you heard of a broker running a CMA and confirming all the data in it?
Well, I mean, I'm sure there's different ways of going about this, but most likely they're using sales that they're familiar with or their office.
And that would be
completed.
Assuming they know that the other sisters entered the information incorrectly.
Right, but their main source, yes, is MLS. So data that they're receiving would be the same as appraisers, and then their process, though, of correlating that is going to be very superficial.
Well, sure.
You're talking about 5 to 10 minutes. Most likely, most MLS services now have a button you can push.
Right. But garbage in, garbage out. So it's analyzing information that you've selected for it to analyze. And so if you are looking to come up with the market value of something and all you do is put a bunch of active listings in there or even pending listings, because a pending listing does not say what the pending offer is. It just states that what the ask price was at the time that it went pending.
Correct, yes.
So there's a lot of opportunity to introduce error and then crunch the numbers and compound the error.
Exactly, yes. And what is the method of this comparison? There's no rule or guideline for CMA.
Well, let's hope that realtors, there are a number of good. Let's even just assume that they're the majority of the sales agents or roads. And when we say real estate brokers, every state has a different term for that. Oregon calls them one thing. Alaska calls them something different. There's also different levels. They're not all the same level. There's sales agents, there's brokers. Sometimes sometimes the broker means the person owns the company and everyone works for them, right? So there's different terms. We're going to just use the term generically. And if you say realtor, which a lot of people do, well, that's just means that they're a member of the Realtor Association.
Right.
So we're going to lump them all into the same pot, which is horribly unfair to do, and say there's a lot of incorrect information running around, but we would hope that the good ones, the CCIMs, the realtor designated agents, right?
Yes.
The broker, the principal brokers, the good ones, right? That know better, get some training in how to do this. I mean, I've taken the basic training courses to pass the test. And other than the fact that you can do it in 8 hours on a Saturday and do it all and pass the test, the next day. There's not a lot of entry-level training in how to properly adjust or price a property.
Yeah.
It's taught through internship and feel and on the fly, or a lot of them just get thrown to the wolves.
Yes, and that's a good point too. Is it's a price. It's a difference between a market value, which is determined by an appraisal, and a broker's price opinion, which is their opinion of.
It could be based on a lot of things. So we're trying to be fair and saying there are some that have some training that we have no idea what it is, and some of them seemed or should be capable of coming up with a price for a reason, for whatever the scope that it's intended to be. What it shouldn't be used for is lending or court cases or anything where the number actually matters.
Correct. And their skill sets is marketing and other avenues that are outside of the appraising world. So
one of my favorite things to do, often when we go on a site visit for you to perform an appraisal, I'll go with. And I love to ask whoever the sales agent is or broker who's there, how they came up with their price point for their listing price. And it is hilarious, the answers that you get. Can you think of some particularly good ones? One I heard this last year alone from actually a very well-respected broker that you and I have a lot of respect for, who is very good. He's one of those that has a hunch and he knows, and he's usually very close, like within 5% almost all the time. He's just good. He's been doing it a long time. But you know what he said? He said, well, I knew what it was worth and I knew what it should be worth, and I just tripled it. And it was really funny right up until it closed or went pending 3 days later and ended up closing for more than the list price. So there's been some crazy stuff going on. But that's probably the best one I've ever heard. Well, I just took what I knew it was worth and I tripled it. What about you? What would you say was that was a good one.
Yeah, you hear all kinds of things, but
the fun part is when they say, well, I did this analysis and this analysis, and then I just say, oh, what sales did you pair, or what kind of cost to cure did you come up with for those adjustments? And they just look at you with the weirdest, like, what are you talking? I don't. And the one just said, I don't know what you're talking about. And I went, that's kind of the point.
Right. So it's, you see all kinds of conglomerations of different things that, that sometimes you get a big 3-page letter.
Well, not surprisingly, that one, then she didn't understand the terms, was a sale that we had the closed purchase agreement for. And interestingly, the recorded MLS data sales price was significantly different. Not only that, but the terms of finance were also completely fabricated.
Well, the finance terms are something.
That's just one local realtor who's pretty well known for doing that.
You have to, have good relationship with and know that when you do confirm a sale, that they'll be, they'll let you know if there's any atypical situation.
Concessions, major repairs, had to buy the parcel next door to put a septic on because it didn't have a legal one, things like that. Or another recent commercial one that we did that was built 24 or 20 feet into the road easement, not into the setback, way past the setback, we're into the road. It closed.
Yes.
It closed.
Mm-hmm.
So Alaska is the wild, wild west when it comes to a lot of these things. We were actually, we didn't talk about this beforehand. I'll just throw it out here and you're welcome. I was contacted this morning about another Soldotna area residential, and it's hard because it's hard for us. We can't help these people very much once they've gone past this part. We can do residential appraisal, but we don't typically do them unless it goes to litigation. Mm-hmm. And this person may end up in litigation, but an out-of-state buyer came up here and did a federal housing loan, which means that it should have been inspected by layers of professionals. I didn't get out of her who the inspector was. I got the impression that they somehow were able to waive the home inspection. I don't know how that works because we're not into the residential world all that much, so we don't necessarily know all the loan programs, but I didn't know you could do that for federal housing loans. It was waived, and now their house is falling apart. All the vents were terminated in the attic. Some of them were terminated just in the wall space. They have some horrible things happening with their house. They're losing their roof. Part of the house is falling down. Somewhat recent construction as well, which means there's a contractor involved. 2 different local realtor offices, which was nice to see because I was concerned it would be the same brokerage. A lot of that happens when one friend broker at the same company uses their friend and they get together and make a deal happen. And unfortunately, a lot of things get missed because the buyers and sellers waive their rights in those cases. But this is a sad situation, and they, may end up homeless here. And when she told me the realtors involved, one was no surprise, one was a surprise. And the fact that they had waived a home inspection, again, I didn't ask who the appraiser was. We know it wasn't us because we don't do that type of appraisals generally. It's not just because we can. We talked about that last week in the last episode, but why we don't do a lot of residential work. There's no money in it for us. But it's unfortunate to see stories like this of people that are getting taken advantage of through unscrupulous professionals, or they're convinced to waive their rights. And in the end, they're probably not going to get anywhere because they waived their rights. And so we always tell people, get an appraisal from a good appraiser. But that's not just appraisers, that's home inspectors. Right. It's realtors. Hire good professionals. Get recommendations, right? Hire good people.
Yes, it's important, especially in large asset such as real estate is for most people. It's
a lot of people. A home mortgage is a very large loan for them, and
yes,
yeah,
there are other options that are offered for borrowers, especially if you're borrowing money. They oftentimes will offer you a CMA or a BPO kind of. AVM is another term they use.
Yeah.
And that is typically done with tax assessor records or other types of records that the loan officer has. That is.
We had a customer call the other day and said that one of the local credit unions was willing to loan based on their tax assessment.
Yes.
I think that was vacant land. It was large acreage vacant land. So,
well, it's depending on the property. It can be something that can be useful, but
you and I have found through experience that the Kenai Peninsula Borough is actually fairly good at doing vacant land.
In some areas, yes, they are.
Not tidelands, not riverfront, not they'll value something as lakefront when it's it's a mosquito swamp. So we're not talking about those situations. We're
right.
But they're not too far off.
Yeah, in some properties where they actually are noting the delineation of wetlands. Yes, I believe that they're getting a pretty good gauge of land value.
Dissimilarly to DNR and especially TLO. And so if you know what those things stand for, then you'll understand that DNR land is worth significantly more money than land that's actually connected to roads. The same size parcels without the wetland, somehow there's a disparity in value. But I'm sure when the guy flew over in the airplane,
he saw a road.
He saw something that made it worth this magical number. And as bad as DNR is, TLO is so much worse.
Well, that's a topic for another day.
We should get into that. That would be fun. But it really is about all the time we have for this episode. Thank you so much for joining us. I hope you got something out of this. If nothing else, we hope that we are entertaining.